Well, we are underweight Korean equities. It's not our only underweight. We're also underweight China, Taiwan, and Mexico. And I think our view on the Korean market is that it's not that well positioned in a global economic slowdown, and particularly as one of the most trade-exposed markets and geographies we cover, with all the tariff and non-tariff issues underway. But also there's a semiconductor cycle that's starting to form on the downside. And in addition, the auto sector is quite impaired globally, and they're heavily represented in the Korean market. Our economists, even before these recent events, were expecting growth to slip below 2% for Korea next year, which is one of the biggest decelerations that we would see globally.
But one of the hallmarks of the policy that the government was trying to kind of put in place was the value up story, right?
Yes.
And the Korean discount, which investors were being sold. You know, the whole idea was being pitched around how these stocks are looking attractive, not just the chip players, but the broader market. What happens to that story now?
Well, we did have the Value Up Index launched just a little while ago, and it's something that we've been monitoring very closely. But the way we would sort of frame it is that this is a journey that took Japan a long time in terms of how it implemented it and investor recognition of implementation. I remember talking about this in Japan like over a decade ago, but it was really only in the last 3 or 4 years that investors really understood how important the changes were in Japan once they'd seen companies actually deliver. And so, yes, we're monitoring it, but I would say that it's not sort of up front and center versus those cyclical issues that I just mentioned.
You're overweight financials in the region. Can you talk to us about that and which markets that you're not looking at through that lens?
Yeah, sure. So this is actually a sort of global call at Morgan Stanley. We're overweight financials in US, Europe and Asia, broadly speaking. And that's quite unusual, and we're quite cautious on semis and tech and autos on a global basis. Within this region, we strongly prefer financials in Japan, India, Indonesia, right here in Singapore, versus, say, Chinese financials, where the deflationary outlook tends to be quite bad from an asset quality and an earnings growth perspective.